So what are the options now for struggling flag carrier Qantas? I'm joined by Stephen Bartholomew from Business Spectator. Steve, what can they do?
Oh, the things within their control they're trying to do. So, we had that announcement of the $2 billion cost-cutting program and the 5,000 jobs associated with that over the next couple of years. That's going to be pretty traumatic. They've also got a strategic review, which is not completed yet, which might see some of the frequent flyer program, which is extremely valuable, sold off to raise some cash. It could see bits of Jetstar floated off, sold. They're options of last resort. You don't give up your core businesses or bits of them unless you really, really have to. They've deferred and plan to sell some aircraft to try and reduce costs and cut down their capital outlays. They've shut down the growth of Jetstar Asia, for the time being at least. So those things are things that they can do something about, unions willing. The things that they can't do much about are relate to the political environment. They've asked for two things. One which they don't really want today, which is the repeal of the Qantas Sale Act, which restricts both levels of foreign ownership and therefore access to capital. Although that's kind of academic at the moment because we don't think they'd actually get access to any improved access to capital if that act changed. More particularly, they could move their maintenance offshore, or more of it offshore. The Sale Act requires them to have a majority of their operations in Australia. So they could go into lower cost environments if they could get that act changed. The other option open to Qantas, and the one that they'd be very, very reluctant to exercise, would be to surrender in the capacity wars against Virgin. Stop adding capacity, surrender market share, and that would have an positive impact on profitability in the near term, but in the long term could put a big question mark over their position in the domestic market.
Now this is based on the idea of the famous S-curve, that you need 65% market share to basically sort of stand still in some sense if you're a carrier. Just explain how that kind of theory works.
Well, the S-curve's an old mathematical theory, but think in sort of logical terms. Qantas at the moment has just under 65% of the market, and they've always talked about that as being their line in the sand, even though the line tends to move a few percent in either direction. They're facing a competitor with a significant cost advantage in the domestic market. Virgin's cost advantage, Qantas estimates at 18%, so a very significant cost advantage. To offset that cost advantage, Qantas needs a yield premium. They need to have a disproportionate share of those people who pay full fare, which is fundamentally businesses, the pointy end of the plane, and those people who actually pay the full price. And a lot of people don't, obviously, because they have non-flexible fares and the like. So Qantas has a dominant position in that part of the market post after the collapse of Ansett. That offsets their cost disadvantage because they have this disproportionate share that allows them to be a higher cost airline than Virgin. If they were to lose that dominance, if they, for instance, split that high yield market with Virgin, or even allowed Virgin to get somewhere closer to parity in that market, and that's what Borghetti's trying to do with Virgin, is to take that off Qantas, then the cost disadvantage starts to really hurt because Virgin will always be able to underprice them if they want to. And so once you start ceding the market share, then it's a kind of bottomless pit that you descend into.
So the other option, of course, is to do something about those old enterprise agreements that Qantas has, where they've got a much higher cost base in terms of staff. I mean, can they take that industrial relations route by looking at cutting staff hugely or trying to cut conditions?
Well, in a sense, that's what they're trying to do, and you would expect that the 5,000 staff, in an ideal world from Qantas' perspective, the job losses would fall disproportionately on those who've got the shelter of those old EBA agreements. Now, Qantas has got 49 enterprise bargaining arrangements. About half their workforce is still on kind of legacy IR arrangements. The problem is, in the current industrial relations environment, you can't actually just tear these things up. And even an attempt to do so would cause a kind of industrial disputation, which grounded the airline not that long ago. So it's a very difficult position that Qantas has got to navigate its way through. They've got to convince their employees that they'll save more jobs by cooperating with the jobs that are going, and by not they're asking for wage freezes right across the business and so on. So if the unions cooperate, then there's a pathway towards a lower cost structure, not necessarily a low cost structure. If they can't convince the unions that the 27,000 jobs that be left are worth actually fighting for, then they're in a bit of strife.
Steve Bartholomew, thank you very much.
Thank you, Jackson.